You think about inflationary pressures we're dealing with, supply chain issues, geopolitical issues like the challenges in Ukraine and how that's impacting businesses in general, and this risk of a recession, as you're hearing a lot of people talking about that. To jump in and look at a financial services organization, and it's a unique one. It's not a bank, as you think about kind of banking. We'll talk about that, but to kind of look at how much are we transacting. I was thinking today I should have brought my Visa and have everybody grab your Visa. I imagine we all have one. And how much transacting are you doing right now with that Visa? It'll be interesting as you look at the volume of transactions that we use when we use our Visa credit cards. Is quite tremendous. And I know right now we're using it quite a bit. So anyways, great to have you today. As Bailey kind of described, we are going to be using that chat box as our main communication tool. So let's make sure we have that open. And for those who have been with us before, welcome back. For those that are new, no worries. Here's what I want you to do. Just in the chat box, put where you're calling in from. For those who have been with us, you'll know our headquarters are just south of Salt Lake City, Utah. So go into your chat box and just put in where you're calling in from. Could be a city, could be a state, could be a country. Could be a location in your home, as many of us are still either doing a hybrid, and some of us may be working from home today. Here in Salt Lake City, Utah, our claim to fame is we had the chance to host the Winter Olympics in 2002. And we suggest we have some of the best snow on earth. And today we're getting pelted. I was just listening to a report as I was coming in the office today. One of our ski resorts got 48 inches in this last storm that just happened yesterday. 48 inches of new powder. Now, some of you ski individuals are like, man, I want to come there and get going. Come on, visit us. Come out. We'd love to have you and enjoy the great skiing we have here in the great state of Utah. Well, it looks like people are comfortable. We got people. Excellent. Bucharest. Welcome, Janine. Good to have you. Kind of all throughout the United States. Hey, for those that are new to these, we monthly have a chance to get on these calls and we practice using the tools to help you assess an earnings call. For some of you, you're participants in our programs. You've been through our programs before and were introduced to these tools. If you're brand new, no worries. We'll give you the tools. We'll show you how to use them and show you how to get more knowledge and more information on business and financial acumen for yourself and for your teams. But quickly, another tool we're going to be using is the polling. So I'm going to open a poll. Just give me a little feel for who's new versus who has been with us for a while. Now, every month we do this, different companies. Last month we did Boeing. Month before that we did Disney Enterprises. We do oil and gas companies, healthcare companies, consumer product companies, Tesla, some well-known names. We've done Zoom, the platform we're using today. So it's a great way to, one, get exposed to different industries, but get more and more comfortable at listening to these earnings call experiences. So looks like everybody's responded as I look at it. A majority of you, it's your first time. So welcome. I'm so excited to have you here today. And I guarantee I will do my best to provide an experience that can help you not just today, but as you continue to progress within your role in your organization or with the companies you might be working with as well. Well, let me go ahead and close out that poll, and I'm going to go ahead and share my screen, and we'll get going here. So, as I said, what the CEO needs you to know, earnings call, and we're focusing on Visa today. And it's as we look at Visa, I want to start by just one other poll question real quick here. The poll question is, you're coming to a program where we're going to talk about how to listen to earnings calls, how to make sense of them. So my question to you, as I open my poll section here, is when's the last time you listened to an earnings call? So I'll open that poll up here. When's the last time I've attended, listen to an earnings call is my poll here. Here you go. I've listened to one this year, Brent. No, it was last year. It's been a long time. Or you know what? I've never actually had a chance to listen to these earnings calls. Of course, if you're publicly traded, you have opportunities every quarter to kind of get that information from your executive team. If you're an individual selling into customers that are publicly traded, this is what I consider one of the hidden gems in business. Every quarter, publicly traded companies with 99% of publicly traded companies, they'll get on a call, they'll communicate kind of where they're currently at, where they're going to go, and how they're going to get there. It's a great way to see what's going on in the business, what they're trying to accomplish, and what they're looking for as they move forward. So it's a great way to get information, to understand your company, if it's your company, to understand your customers better that you might be selling into or work with. Or maybe it's just, Brent, I want to understand how to think about business in a broader perspective. Maybe some of the companies you want to invest in, I want to see what's really going on in the business. So it looks like majority of us have listened to earnings calls, so great. I do have about 12%. I've never done it, and 4% of us were honest enough to say, I'd rather be going to the dentist than participating in these earnings calls. Well, let me kind of describe a process for you. Today, I'm going to give you a simple framework and 2 tools that will help you assess these earnings calls, make sense of them, be able to take it back and apply it in whatever application you want to apply. So what I want to start by is just share some interesting stats. As you think about every quarter, these earnings calls are available for everybody. You can access them. I'll show you how to do that. You don't have to be an employee. You don't even have to be an investor. These are publicly available for each of us. Well, with that, this was a stat that came out from Harvard Business Review. They found 95% of employees don't understand company strategy. These earnings calls are a great place to kind of say where we've been, where we currently at, where we're going to go. That's where you hear the strategy of the company. They kind of give an assessment of how well their strategy is working, as well as what they're doing in the future to kind of get them to the next level. Well, here's another interesting statistic. 90% of employees don't understand their important business metrics of the company. Again, these earnings calls are a place where you get a lot of information. They talk about them, they explain why they're important, etc. So with that in mind, our goal here at Acumen Learning is we want to improve these statistics. We want to get to where, the majority of the employees understand kind of how to get clear around the strategy of your organization, how to understand the key metrics and measures, and then more importantly, what can you do with that? So imagine with these statistics, and you're a CEO of a multi-billion-dollar company. And in this case, of course, it's Mr. Alfred Kelly, Visa's current CEO. By the way, they just announced a new CEO that will take over, I think it's February 1st. Their president, Ryan McKerney, I think is his name, if I remember correctly. But imagine you're part of a major global branded institution, a network of communication and connection points to transact. It's been in business since 1958. It's one of the world's largest well-known brands. I mean, everybody knows Visa, right? Transacts in over 160 currencies. By the way, you know how many different currencies possible? Like kind of the core currencies? There's 180 of them. So think about that. Just the currency exchange. They did $14.4 trillion of volume. Now, that's not their revenue. But the amount of transactions, about $14.4 billion of transactions. More than 26,000 employees in over 200 countries. You're now the CEO of this company. You recognize that some stats suggest that 95% of your employees don't understand your strategies. 90% of your employees don't understand the key metrics that you're trying to get them to think about, that you're communicating to the market, that you're driving towards. Well, how do we get better at that? And that's really the message of what these earnings call and what our goal here at Acumen Learning. For those that have gone through our course, this is probably one of the best ways to continue to apply the concepts. But if you're brand new, and even if you've never worked with us, to be able to come and get more comfortable around this will differentiate you in your organization for sure. So as you think about it as a CEO, what is it you want your employees to know? What is it you want your customers to know? What about the shareholders that invest in you? And particularly with Visa, who majority of their connections are partnerships. Think about it. Look at your Visa, and you'll notice on your Visa, it's not just Visa by itself. Visa does not actually fund the transactions like some of the other credit cards. They're actually a connection point. Their goal is to provide transactions, the security of our transactions, to be able to transfer money, to allow people to e-commerce, to purchase things. They're basically a network connecting people to buy and sell products or goods. They actually don't fund the transaction. That's why you look at your Visa and you might see Citibank, or you might see up in Canada RBC, or whatever financial institution that's running that. So as you think about that, they are absolutely have a tremendous number of partners they're working with. All the financial institutions that they kind of co-brand. Not only do that, but they'll actually co-brand with major players, major retail stores as well. So what is it you need your partners to know as well with the global impact that you're working at with Visa? Well, that's what these earnings calls are all about. My goal, my commitment to you, we've been in business for 20 years. All we do is focus on this topic of business and financial acumen, which is absolutely vital in leadership development. As you think about a typical leadership program, we look at understanding ourselves as a leader. We'll then talk about how to lead others. I think a great opportunity, if you're in L&D space, to really differentiate your learning is to help them understand your business as well. Because you can be great as a leader and really motivate and engage your employees, but if you don't understand the direction your organization is going, the key strategies, the key metrics, you may be steering in the wrong direction. So making sure that business and financial acumen is core, and one of the ways you can do that is help your employees understand how to listen to these earnings calls, how to make sense of them, and then with their functional expertise, be able to go back and execute. So my guarantee to you is you use this tool 2 to 3 times consecutively, you absolutely will build your credibility within your organization. You'll build your career, but just as important, you'll build your company. You'll help them make the right decision at the right time with the right execution. So with that introduction, I want to just give you this simple process. There's 3 steps as you go through how to listen to these earnings calls. Number 1, you got to prepare for them. Second thing, you got to analyze the numbers, capture the information, the strategic objectives, as well as the financial performance. But then probably the most important is that third thing to the right there. How am I going to apply it? What am I going to do? How am I going to take that information, if it's my company, and make good decisions day in and day out? If it's a customer, how can I use that information to help them understand how a partnership with my company will drive towards their key strategies and their key financial metrics? If it's a company I'm looking to invest in, how can I take this information, really think about what's the validity of this organization and the long-term sustainability of their success that will drive their stock price? In the end, application is going to be key. So that's what I want to do. I'm going to walk you through each one of this. So let's start with the prepare phase. In the tool we'll make available at the end of our call today, it's going to have this first section around preparation. Let me start with just kind of earnings call 101. If you're new to earnings call, they're not required. Publicly traded companies are required to submit here in the United States to the Security Exchange Commissions. If they're in other countries, they have to submit to their regulatory organizations as well. But here in the United States, they have to submit to the Security Exchange Commission, what we call the SEC, on a quarterly basis. On an annual basis, they also have to do kind of a full year look at. Visa just ended their full year. So the numbers I'm going to look at today, they ended as of September 30th. So they're actually in their Q1, which will end December 31st. So they're in Q1 of 2023 already, but the numbers I'm going to look at are 2022. In these calls, most companies, like I said, 99% of companies are going to take the opportunity to have an earnings call where they don't want to just submit their financial information and help everybody else translate it. They want to kind of share their vision. They want to share their marketing. They want to share their strategy. And so it starts with about somewhere between 15 to 45 minutes of prepared remarks, where the executive team, in this case, their CEO and their CFO, have a chance to communicate to the market kind of how they performed, where they're currently at, and where they want to go. Then it shifts gears. Then you have a Q&A. Now, this Q&A, it's not open to most of us, meaning I can't just jump on and say, hey, Mr. Alfred, I'd like to ask a question about your visa. It's going to be analysts. It's going to be major institutional investment firms like Barclays, like Wells Fargo, like Wolf Capital, a number of them that are tracking their stock. And they're going to ask all sorts of questions because their whole goal is to get as much information. They're then going to write a report and they're going to say, look, should you hold on to this? Should you sell or should you buy? There's actually multiple levels, but those are the crux of the basics. So that's these earnings calls. They're anywhere from about 50 minutes to an hour and a half. Most of them around that kind of 50 to an hour time frame is what you'll see. So as you look at preparation, what do I need to do to prepare? Number one, you got to locate the call itself, sign up for it, or access the transcript. So how to do that? I'll quickly do that here. By the way, this whole thing is going to get recorded, so it'll be on our website. If you've registered, you'll get a link to this as well. So don't feel like you have to capture everything. You're going to get a video of this. But here you go. There's this great website we all know about. It's called Google. This is the easiest way to access. I just walk in. I type in Visa. Now, if I don't know that it's their Q, I might be guessing for Q3, but I actually know that it's their full year. So I'd say 2022, and just say something like earnings, transcript, anything like that. You'll notice it's guessing, earnings call, earnings call transcript. Those are the types of things you want to look at. So I just click on that. And what I'm looking for is you got these kind of third-party groups. I want to see Visa. I want to see something that's coming from that. So you'll notice investors at visa.com. So I click there. Boom, I'm into it. I type in the name of the company. You can just write quarterly results, earnings, whatever. It's going to take you to their website and show you that information. Now, what I love about Visa is they give you a lot of information. They actually give you a press release. So I know it's the full year 2022. So here's their press release. These are great. It's a great summary of what they're going to communicate in the earnings call itself. So I often look for that. If they have a presentation, I love the presentations. Why? It gives a summary of what they're talking about in very simple, nice graphical ways. I can actually look at a presentation and get probably 70% there as far as what's going on in their business. Now, not everybody provides a transcript, but they do. If not, there's third-party websites you can go to. You just type in the name of the company, put for the quarter you want, ask for a transcript, and you'll go to a third party if they don't have it themselves. Now, Visa does. It's right here. Word by word, what's communicated. Now, of course, what you're seeing here is because it's already happened. This call happened in October, first part of November, if I remember correctly. Well, if it's pre that, you're going to actually register for the call itself. In fact, if you go to events here, if I remember correctly, you'll see that their next call is coming up. Nope, I thought they had it here. Nope, looks like it's not there yet. I think they've just announced that it's coming, but there's not a registration. But what you'd actually do is you'd go to their website. You can register. Now what happens on the registration is it's just going to give you a link that says, okay, here's the call when it's happening. You click on that, you can listen to it itself. But once the calls actually happen, they actually will script it. This is word for word. Here's their investor relation person, kicked it off. Then Mr. Kelly, he spoke about their business. So it's word for word. Not only it's that, but the end of it, the second part is the Q&A. And when you get to the Q&A, it actually walks through every question the analyst asked. So those are the types of things that you're going to look for. You want to look for, as I said before, the press release, the actual presentation if they have it, get access to a transcript. Now, the quarterly report is their SEC filing. You'll notice they don't have it out yet, but if I can get access to that, I want to do that. And then the actual webinar itself where you can listen to the call itself. Those are the things you want to look for when you try and get it. So that's the first step. Do a quick Google search. Look for the call. If it's pre-call, you're going to register. If it's post-call, you look for transcripts, you look for press releases, and you look for presentations. Now, step 2 is to review your notes. And you might be saying, Brent, I've never done this before. What notes are you talking about? For those of you who've been with us before, this tool becomes the notes. As you go through it on a quarter, you keep that. So then when you get to the next quarter, you can kind of compare what you heard in the prior quarter versus what they're saying in the most recent quarter. Now, if you don't have any notes, as I said before, you can go to their website and I can look at what happened in Q3. It's right here. I can actually go and look at their transcript from Q3 if I wanted to do that prior to their Q4 call. So whatever you can to kind of review your notes is a great way to kind of see this is where they said they were going to be. Now I listen to the call, what actually happened. The last thing I'd suggest is meet with your team. This is a great thing. If you're a leader and you want to differentiate yourself as a leader, one, get comfortable doing that, but then start inviting your colleagues, your peers, even your direct reports to walk through. Now, all of a sudden, you're not just looking at your functional area. You're able to say, here's what we're doing as a company. Now let's look at our role. What can we do to impact the success of our business? How can we drive EBITDA? How can we drive return on capital employed? Whatever your key metrics are, et cetera. So it's a great way to develop your teams. Folks, that's the preparation. Pretty simple. Access it, review your notes, and get a team together. Let's jump in the analyze phase. Now, when you look at analysis, there's 2 tools I'm going to introduce you to. But before I do it, I want to give you the simple framework. For those that have been in our calls before, been through our courses, you'll be very familiar with this 5-driver. For those that are new, let me give you a high level. We'll kind of walk through it. Everybody else, open your chat box, particularly 70% of you, a significant percent of you are actually participants of our program. So let's help do the review. When we talk about cash in business, there's a common phrase, cash is blank. Answer that. What would we say as we talk about the importance of cash in business? Put in the chat box. Cash is, Andrew says, king. Anybody else? Ben said, yeah, king. Absolute lifeline. There you go, for sure. This is vitally important. So as we talk about the 5 fundamental drivers of every business, cash is going to be vitally important. Now, we look at cash. There's various metrics you can look at. Common metrics are just kind of your cash on hand. Sometimes the accounting terms called cash and cash equivalent. The other is what we call cash flow. The difference between all the cash that comes in from a business minus all the cash that goes out from a business. The key financial statement, you go to find that information in the financials itself, is going to be the cash flow statement right here. Now, as you talk about profitability, there's two levers that impact profitability. If you, as an individual contributor, as a leader, you want to impact the profitability of the business, you got to increase something and or decrease something. Anybody remember the two levers to impact profitability? You don't have to go through our class. You know this. What's one of the common things your executive teams are asking you to do to drive profitability in your business? Larry's kind of saying revenue expenses. So we increase our revenue, also our sales, right? Those are some common terms there. Minimize our expenses. There, absolutely. We get a lot of pressure, do we not, on reducing our cost or our expenses? Those are the two key levers. We have an opportunity to do that. Now, different profitability metrics, we'll talk about like gross profit, operating profit. Sometimes they'll talk about EBIT, which is earnings before interest and tax, EBITDA. Now, some of you are saying, Brent, you're throwing a bunch of jargon out. Don't worry. You don't have to memorize all that. I can give you the tools and where to access the information. But profitability is a core driver of every single business. And the statement that executives, that investors look at is that income statement. The third driver we talk about is the balance sheet. When we talk about balance sheet, you talk about both what we call financial strength of a business. You'll hear executives say, I want to strengthen my balance sheet. All you're looking at is think about the debt in relationship to the equity in your own personal life. If I've got a bunch of debt, I got a brand new home I just barely bought, I've paid a little bit of it off, I've got a bunch of vehicles, etc. I got high debt in relationship to my equity, I'm not going to be as financially strong. Now, if I've lived in my house for 20 years and I pay down a significant amount of my mortgage, maybe I only owe 30% left on my mortgage, all of a sudden you're in a much stronger financial position. Well, that's what executives are talking about from a financial strength perspective. Well, to kind of connect with that, they talk about financial asset strength versus asset utilization. Well, asset utilization is all about how do I take those assets and deploy them within my business. What you'll find is asset strength versus asset utilization are kind of like on a teeter-totter. As asset strength then increases, I'm holding on to cash, I'm paying down my debt, you're actually going to see a decrease in your utilization. If I take all that cash that I've borrowed and invested in new assets, new projects, new technologies, I'm going to see an increase in my utilization over here. Kind of what we use is another way we talk about asset utilization versus what we have, which is asset strength. There's this balancing that's often going on. We're dealing with a recession. How many of your companies, by raising your hand or just put in the chat box, how many of your companies are hearing from your executive team, we got to be cautious as we look at 2023 because of a recession? Well, what do we do? What does that mean? Well, I'm going to probably be less investments, I'm going to hold on to more cash, maybe strengthen, pay down my balance debt to strengthen my balance sheet. Well, that's predicting, trying to anticipate what's going to happen with the recession to make sure we can withstand. So this balancing act is often going on. If you want to see what's going on, you're going to look at the balance sheet of a company. Of course, growth is what investors expect, core to any publicly traded company, and then people are what makes it happen. So this simple 5-driver model is all part of any content you would work with us. If you're doing your self-paced online program, if you're in one of our courses, one of our keynotes, you're going to hear about these 5 drivers. I'm going to suggest that these are the fundamental drivers any company will use or look at. It is absolutely the fundamental metrics of Visa. The numbers, now they may look at it a little different as a financial services company, but their revenue for this year is $29.310 billion. They're very focused on what's going on here. How much cash do we have to deploy to expand and build out our infrastructure, build out the network we're looking for? What are our assets and how are we deploying them? What is our growth strategy? Most importantly, how are we impacting both the customers we serve, but also from a team, how do we execute? So that 5-driver model becomes a tool to assess any company. So let me describe the first tool. The first tool that we have, it's called the executive alignment tool. The purpose of this tool is any executive communication you get from your company or any company you're wanting to invest in or you're supporting or competing against, whoever you're looking at, you use this framework to assess the strategic focus. Here's how it works. Basically, as you listen to the call or if you're reading the transcript, every time they say something about cash, you put a little slash mark. Every time they say something about profitability, put a little slash mark. At the end, you're going to total up whatever that number is over here. And then, now some of you might say, well, Brent, I've never been through your program. Like, what are the examples or metrics of cash that I should be listening for? Or how do I differentiate profitability versus cash? Well, don't worry. In the tool, we give you a quick definition of what we mean by cash. Not only that, I think the genius of this tool, in my opinion, by the way, I didn't develop, as our content team, is right here. It has what I call trigger words. Examples, if you hear anything about sources and use of cash, they're talking about dividends or distributions, they're talking about stock buyback, that's absolutely going to be a slash mark for cash. Versus down here, if you hear stuff about profitability, EBIT, EBITDA, that's going to be a slash around profitability. So you go through that whole calculation. The last step of this tool is then you answer 4 simple questions. The first question you'll see on the tool is which drivers seem to get the most attention? I love the second part. Why? What's going on in the market? What's the regulatory environment? What about the global economy? One of the things they talk about is cross-border transactions. Well, we're seeing a lot more travel. So during pandemic, we would sit in our own location and we'd transact. But now we're seeing people travel. So you're starting to see foreign exchange implications to Visa. So why are they focused on growth and how it impacts their cash flow or profitability into the context of more people are transacting outside of their borders, if that makes sense? What are the 2 or 3 main points the executive was trying to make? What are the goals, trends, and objectives going forward? And I love the last part of this tool where you're listening to the earnings call. What are the key questions or concerns the analysts brought up? I love that part because often people say, well, I just want to listen to the prepared remarks. But the real value is to listen to what their analysts are asking. You start to see where there's congruency and connectiveness versus when they're kind of saying, wait, I don't know that I buy that. In fact, you'll even hear sometimes an analyst say, look, you keep saying this, but all your numbers are saying this. I don't know how, help me understand what's really going on here. And they can get pretty aggressive in that. So that's how you use it. At the end of it, you can go then look at the stock price. What happened to the stock price? What is the market seeing around the performance after this call? So that's the tool called the Executive Alignment Activity or Executive Alignment Tool. For those who have been with us before, you remember we're going to practice using this. So what I've got here is I've got 3 quotes from the call. We don't have time to go through the full hour and 10 minutes of a call that we had. But what I've got here is I've got just a quick quote. And what I want you to do is everybody open your chat box. Don't worry if you haven't been through our course. You got the principles, the 5 driver models there. Here's what I want to walk through. Which of the 5 drivers is you focusing on? So I'll read through it. You put in the chat box what you're seeing. So right here, it says net revenues were up 19%, and GAAP or GAAP, which stands for Generally Accepted Accounting Principles. That's the way here in North America we do our accounting. Earnings per share or EPS was up 13%. Non-EPS was up 9%. Which of the 5 drivers, looking at my 5 drivers, are you seeing in that first sentence there? Put in the chat box, will you? Yeah, profitability. Now, some of you may say, well, I haven't been to your class, but right here, revenues is going to be part of your P&L. It's the top line. It's your revenue. It's your total sales, whatever you want to call it, which is absolutely a profitability. I love, though, Tony's kind of saying, but wait a second, there's growth as well, right? We're up 19%. EPS is up, again, 13%. And earnings per share is just a form of a profitability metric. And again, everything's up. So definitely growth and profitability in that first sentence. Now, some might say, Tony's saying cash. Well, the outcome of profitability, it will eventually generate cash. Now, as you go through, there's actually some cash comments. So let's go to the next statement here. The strong dollar was a stiff headwind driving down reported net revenue growth. Now, what do I mean? As the dollar, the US dollar gets stronger and stronger against other currencies, and I'm working in 160 currencies, the transactions that happen there, I'm generating less and less US dollars. So that's what they mean by headwinds there. Driving down reported net revenue growth by 4 points and non-GAAP EPS growth also by 4 points. Basically, because of that strength of the dollar, we're generating less revenue, less profitability. Discontinuation of operations in Russia reduced net revenue growth by about 5 points. So what are we having there? Which drivers do you see in that second set of sentences there? Was that profitability Kimberly put in there? Anybody else want to weigh in? Yeah, we're back to growth, but it's a little bit the other. We're growing in our top line, but we're not growing as fast because of some of these headwinds. Now, obviously, the idea of profitability is there, right? We're talking about revenue again. It's real easy when they use the word growth to pull that in as one of the metrics. Well, let me go to the next sentence here. Our 3 growth engines, consumer payments, new flows, and value-added services. By the way, if you're not familiar with them, I'll speak to a little bit about those, but they've got a great website that shows a nice overview of those 3 areas of growth for them. All grew revenues in excess of 20% of constant dollar. What are you seeing there? Obviously, I'm seeing growth again, and they're saying it multiple times. They're using the word there. Not only that, you start to look at stuff like, These are revenue opportunities. These are services. These are potentially assets they're deploying. It's how they generate. So you start to see a little bit of these are three core engines of growth, assets that they use to grow their business. Now we start dealing with cash here, right? They're taking cash, 11.6 billion, to actually buy back stock. So that's cash right there, right? Contributions to litigation escrow account, which the same effect as stock buybacks was about 800. So I take 800 million, put in some investments there. We also paid 3.2 billion in dividends. If you're not familiar with dividends, that's cash going back to investors. So what drivers are we looking at in that last section? Absolutely, Jim Ling. We got cash for sure. Assets coming in a little bit for sure. How they're deploying that cash. Well, folks, that's how it is. Now, what you'll notice is not rocket science, meaning if you and I were to go through and read these two paragraphs on our own, we might not have the exact same number of slash marks, but we do over 20 years, we do about at least 1,000 to 1,100 events every single year where we use this tool. And in those events, invariably, the top 2 to 3 drivers will always go to the top. We may not have the exact same numbers, but the key drivers they're focused on, everybody's clear on what those drivers are. Well, not only do you get the CEO speaking to the market, but you also get the CFO. So I'm going to be quiet. I'm not going to read it. I just want you to read through it and put in the chat box, what drivers are you seeing from this communication from their CFO? Put in the chat box. What are you seeing? As you read through, just put which of the drivers are you seeing in their communication there. If you scroll through our chat box, you notice one driver is getting a lot of time and attention. There's a lot about growth for sure. Absolutely, there's some cash components to it, a little bit of their customer base. I saw people in there. This big, China and adjustment for Russia, how that's impacting some of the things that are going on in their business. This idea of cross-border travel recovery, that's having a major impact as people start to travel more, right? So their customers, their users are using their cars, not just in their locale, they're using it all over the globe, and that's impacting some of their numbers as well. So yeah, definitely growth is there, but a lot of profitability, cash flow, a little bit of people there as well. Well, not only do you get that from the communication, from the prepared remarks, you also get it from their investor community. So this is Darren Peller, senior analyst at Wolfe Research. And this will be our last one. What do you see in here? What is he communicating? Which of the 5 drivers do you see him focused on? As you'll notice, it's not as clearly articulated. There's a bit of him questioning some stuff in this quote. Which of the 5 drivers are you seeing as you walk through that? Go ahead and put them in the chat box there. So Michelle's kind of talked about people right here. We're talking consumers, right? That's customers. That's our people. We talk about revenues and assets there. Assets and growth you're seeing in there. Well, the big question here is you kind of give us some information on your budget, and that's very helpful. It kind of speaks to even with some of the inflationary things, the challenge we're dealing with, the resiliency of our customers. But just to touch on what if for a minute, I think you have about 1/3 of your revenues coming from new flow. So new transaction, new customer base, et cetera, services. What happens if we go to a recession, you don't have new? So there's a bit of, hey, you're talking about all this growth, but if we go through a recession and 1/3 of your business is new flow revenue gen, what's going to happen if all that kind of pulls back because of a recession? Now, they go back and their answer was, wait a second, it's not 1/3 just new flow. It's 1/3 that comes, new flow is part of it. They're probably closer to about 15% of new flow, but then they answer what they're kind of anticipating to grow. So this is, you start to see how an analyst is trying to get more clarity. You give me some good information, but now if you really lose this because of a recession, what's that going to do to your growth? So a way to, again, talk about the 5 drivers and be able to kind of do an assessment of what's really going on in the business. Well, folks, that's how this tool works. Now, we don't have time to go through every single quote. We spent about 7 minutes or so going through these. I did it for you. Here's the numbers. And you'll notice a couple things as you go through. Growth is by far the theme that you saw. If you just scroll through your chat box, there's by far more things that all of us saw in those three quotes around growth than any of the other ones, but definitely very high in profitability and assets. People, decent amount, but definitely these are kind of the three highest, with growth being the top. So you go and you answer that question. Now here I've got it all filled out, hard for you to read. So let me pull up question by question. The first question is, so which of the business drivers seem to get the most attention and why? And so my comments there is growth. So why? Well, one of the things is all their key metrics drive growth. Now, again, I shared earlier, I love the presentation slides because I can go in and actually see those numbers. So here's coming from their press release. You actually see a little summary about their key numbers. So top line revenue, their profitability metrics are great, but here's some of those not as normal metrics. Like we don't necessarily, if you're not familiar with credit card services kind of key metrics and measures, you start to learn something. Payment volumes is up. Cross-border volume, excluding intra-Europe, meaning Europe going in between, like France to Germany, kind of intra-Europe transaction. They're talking about United States going to Europe, or China coming to the United States. That's what they're talking about there. Cross-border volume totals up. Process transactions up 12-13%. I love this quote on the side. The Visa fiscal fourth quarter, we saw a continuation of many of the spending trends throughout 2022. Strength in consumer payments. By raise of hand, how many of you are buying more stuff online? That e-commerce is the next one. Resilience in e-commerce and ongoing recovery of cross-border travel. That's where they're seeing a lot of growth. These trends contribute to robust full year 2022 results, net revenues, net income, all their profitability metrics they're talking about. As we look ahead, while some short-term uncertainty exists, we remain confident in Visa's long-term growth trajectory. So why growth? All their metrics are growing off of good growth years in prior quarters and prior years as well. What else they talk about? 70% more tap and ride transaction on global transit system, surpassing 1 billion transactions for the first time. How many of us are using the tap and ride service for global transit? Not only that, how many of us are using the tap to be able to purchase? So tap to pay is what they're talking about. It was interesting to kind of research. Those of you that are international, it's a lot more common. As I travel in Europe and different areas, it's a lot more common than I'm seeing here in the U.S. We're seeing the pickup, but definitely it's a little bit of a catch-up here in the United States. But U.S. reached 28% penetration. We saw more than 1 billion tapped monthly transactions for the first time ever in July, surpassing UK as the largest country for tap and pay. So we've been playing a little catch-up here in the United States. But that's a big thing of growth. So it's not just the metrics and measures, B2B growth that they're focused on, some of their added value services, tremendous growth in their partnership, what they call new credentialing of partners, bringing in new partnerships to provide their card services to their customers, their groups or organizations. So why? It's because you're seeing significant growth. You're seeing e-commerce growth. You're seeing people traveling again. So all the stuff that maybe shut down a little bit in 2020 and you started to see a little bit more growth in 2021, you're seeing some significant growth in 2022. But as you think about this, without even looking at the call, so a lot of growth in 2022, what would cause you concern? If you were an analyst and you're seeing all this growth, what might cause you concern as we enter into 2023? Just put on your CEO hat, put on your analyst hat. You got a lot of growth, but what might be some of your questions as you look at 2023 and beyond? What's going to impact their potential for growth in those years would be a good question. As you're thinking about that, global economy, James, absolutely, that's going to have an impact. Inflationary constraints. So inflation, today we have an announcement, and I'm on this call, so I don't know exactly what that came out. There's expected here in the United States an increase of interest rates. Again, about 0.5%, if I remember correctly. We were at 3% on an interest rate for a 30-year loan on a home. We're now over 6% with another 0.5% will put us up. I mean, we're like 20 years ago interest rates. Why are they doing that? They're trying to slow down the spend. But what they're seeing is we're actually seeing growth. So inflation has an impact on that for sure. And of course, the overarching consumer confidence, thank you. This idea of recessionary constraints. Maybe I don't want to be spending as much because I don't know for sure what's going to happen in the future. So what are some of their key messages in the context as some of these future implications. Number one key message was, look, our performance was very strong, demonstrated that our strategies for each of our growth levers are delivering. Significant growth with partnerships, new markets, and growth of existing markets. But this last statement kind of begins this transition into the next question, which what are their going forward kind of predictions, is despite a great deal of uncertainty in the macro climate, from inflation, the war in Ukraine, and regulatory headwinds, and a potential economic down, Visa business model remains resilient. That's kind of their core message from here. So the question then says, okay, well, so what are they predicting in the future? What are they anticipating? This is a big deal for analysts. You told me how you did, but with all those constraints, what are we looking at as we move forward? It says, I see, so this is their CEO, Alfred Kelly, Mr. Kelly saying, I see significant opportunity for the business across all three of our growth engines, consumer payments, new flows, and value-added services. Second, and this is kind of the heart of their strategy. This is their strat doc, and here's some of the products. One of the big things they have is you think about kind of consumer payment, the tap to pay, click to pay, those types of things. Obviously, being able to do all this in a very safe environment, right? We want to make sure they tokenize our information, so you're not actually transacting with our information. There's these tokens that prevent some of that credit fraud and some of those things. So that's some of their new flows or new products they're providing. Open banking, risk identification solutions, advice. It's kind of these three areas they're really focused on as they move forward. And so that's a prediction. Second, we face some headwinds, in particular Latin America Visa, and challenging foreign exchange environment. We did not focus, as they look at their prediction for 2020, they're not anticipating a steep downturn. Now, one of the things they give a caveat, they say, look, we're not economists here, but our predictions are that we move forward with not a significant or steep downturn, but we have plans if it's worse than what we are anticipating. So we do not, basically all their forecasting for the future is not a steep economic downturn or recession in our numbers, but we're ready to adapt quickly. We'll invest in the initiatives that are compelling and provide future growth. So they're not anticipating. One of the comments they said, many of the analysts, the economists are saying, if the recession hits, which is kind of interesting because there's factors that suggest we might already be in a recession. But with that being said, if it'll be later in the year, and there's all sorts of debates, everything, it's going to be one of the worst ones ever, to no, it's going to be kind of a micro recession. And so they're kind of still, like many companies are, trying to go forward with some cautious optimism, but also having plans in place to kind of adapt as needed. So that's kind of their future focus. And the last question of the tool is this right here. What key questions or concerns were raised by the analyst community? Well, number one is that same question, potential recession impacts for 2023. Basically, in all their forecasting, they didn't incorporate much of a downturn. And so the analysts are saying, well, you say there's all these other plans. If you have a significant, what are you going to do? Give me that information is what they were trying to get from them. One of the challenges they're facing, they look at 2020, tough comparables. They've had such growth in 2022, coming out of 2021, that downturn, still coming out of COVID, that now all of a sudden you got, 15% to 30% growth. Now, a year from now, are you going to be able to top that again? So a little bit concerned there as to can you continue to maintain this growth rate? And then foreign exchange impacts. How does a strong dollar impact when you're transacting in 160 different currencies, and the major currency you use is the US dollar, and it's strengthening? How's that going to impact your numbers next year and beyond? Was kind of the question there. And then some of the services, value-added services, trying to take this tokenization. If you're not familiar with it, you might look that up. It's kind of interesting. Rather than get all of our information and use that to transact, they use these tokens that basically allow the consumer and the supplier to transact without the supplier having to carry all that data that potentially could be captured. So it just makes it more secure transactions, and it's a big initiative for them to be able to sell that. Well, folks, that's the tool. Now, at this point, what do I know? I kind of know they've had a great year. I also know some of the challenges, puts and takes they're dealing with kind of the macroeconomic factors, the global economy factors, recession, inflation. Right now isn't quite impacting them. They're not anticipating a significant impact for the majority of 2023. And even if it does come, it's going to be later. So some pretty good optimism as they kind of move forward. Well, the next step is to say, okay, I got that. Well, what about their numbers? How can I see how they're doing their numbers? Now, if you come to our class, we'll walk you through how to look at these income statements, balance sheet, and cash flow statement. But I'm going to suggest to you, you don't have to go through all that to be able to use the tool that we have. The tool is called the Navigating the Financial. Now, the genius of this tool, for anybody who's been in our class, you're familiar, it takes everything we talk in the class and puts it all in one place. So I got the 5 drivers on this side. I got the key metrics most companies focus on. And the genius of this is right here. It tells you where to go to find the information in your financial statements. In addition, if there's any sort of calculations you have to do, it also provides that for you. So this is a great way to do a quick assessment of how the company is doing that you're looking at. Now, if you say, Brent, I don't know exactly what equity ratio is. Well, that great website, type into Google, what is equity ratio? If you've been in our class, the back of your manual has our glossary. You can see that. But you'll be able to do the calculations and then do a quick search and be able to figure that out, or come join us with the Self-Paced Online, or let's do a class for you and you get very familiar with these metrics. But what I want to do is I want to take just a couple minutes. Let's do a few of them, and I'll show you how you might use it, and then we'll do our apply phase and we'll wrap up for today. So as we come here, what we've got is I want to go through and I want to do the first 5 of these together. Now, you don't have the financial statements in front of you. I do. So just open your chat box and let's walk through. If I want to get my cash and cash equivalent, the line I'm looking for is actually cash and cash equivalent. What statement am I going to go to find that? Just put it in the chat box. I want to see if you're comfortable using this statement here. If I want to find cash and cash equivalent, what statement am I going to? Heather's saying it's the balance sheet. Michelle says cash flow. Actually, Michelle, you're correct. You can find it on the balance sheet as well. The most common place people go, though, is your balance sheet. So we go to the balance sheet. Here it is. Here's Visa's fiscal year 2022. So through September 30th, 2022, there's 4 quarters. And for those who've been through our class, you'll remember that on the balance sheet, assets are listed by those things that are most liquid down to least liquid. So in the chat box, you can see it there. How much cash and cash equivalents did Visa have on its balance sheet as of September 30th, 2022? Put in the chat box. Let's see if we're comfortable using this tool. Cash and cash equivalents, the metric. You're looking at the balance sheet. How much cash did they have on? Need reading glasses, Andrew. Sorry. Let's see if I can blow that up. I might mess it up if I blow it up. I'll give you a hint for those that don't need reading glasses. It's right here. Can you see that? Give me a ballpark. I can't read it sometimes. There you go. Yeah, so $15,689. No, it's a million. You guys are right. I'm just playing with you. It's $15,689 million of cash they have on hand. So plenty of cash. $16,689 million. The next one we want to look at is going to be our cash from operations. This is one of the most important lines on most companies. Now, sometimes in a financial institution, they look at it a little differently. But in general, cash flow, cash from operations, we're going to go to that cash flow statement. So if we jump to the cash flow statement, thank you, Michelle, you'll see it right here. And the number I'm looking for is right here, net cash provided by operating activities. For those of us who don't need readers like I do, tell me the number if you can see it there, or blow your screen up so you can see it. Yeah, $18,849 million. It's right here. This represents the difference between all the cash that came in from running Visa's business versus all the cash that went out to run the business. This is the cash that's left over. They can take that and then get back some of that back to investors. They can hold on to it. They can pay down debt with that cash. Of course, this is a metric that investors want to see go up every single year, and you see some nice performance here at Visa. So that's the number, $18,849. Let's do this last one. And the statement we're going to go to is right here. It's our income statement. These are all my profitability metrics, and that's where you're going to go to find them, is on that income statement. So total revenue, we go into that. Let's see, you can zoom at the top of the screen. I'm afraid if I zoom, I won't get it back, so I'm a little nervous about doing that. Anyways, so we got to get that net revenue number. I go to my P&L. You got a net revenue number. You see it right here, $29,310 million. Everybody see that? So I plug that in here. Then I want to go to my net income number. What statement am I going to? Again, it's going to be that income statement. I go over here. Now, there's a bunch of stuff down here, which is part of their earnings per share. Don't get confused by that. Their net income is right here, also referred to as their bottom line, $14,957 million. So now I have the numbers. I have their revenue. I have their net income. Now I want to see what the margin. When you hear margin in finance, all it is a percent of revenue. So I take that net income divide it by my total revenues, and here's my number, 49.8%. For those who have been through our class, or if you just have some familiarity with the economy and business, is that a high margin? For every $100 they brought in their company, they generate $49.80 of profitability. Is it an average margin, or it's way below average margin? What would you guess? This is absolutely humongous. The average for the S&P for 2022 was about 2021 was about 12.5%. This year, it typically averages somewhere between about 8 to 12%. So this is significantly higher. Absolutely high. Now, why is that? Well, think about what does it cost them they're getting paid 2.5% on every transaction. What does it cost them to run their network? I'm not saying there's not a decent cost structure, and some of their added value products, they have some direct costs, etc., but they're getting tremendous margins, and that's what you see in the numbers. Well, folks, I don't have time to go through every single one of these metrics, so I filled it out for you. Here it is. Now, what you want to do is once you've done the current numbers is look at the comparison. Now, this is annual numbers, so I did their current numbers, 2022 versus their 2021 numbers, and you can see some things. One, they're carrying more cash. Now, is that a big deal? Not necessarily. I just want to know what's going on. Now, this is a positive. I love to see that the cash flow is increasing. Net income's up. Margins is a little bit down. Big deal or not? I mean, they got great net present margins, but there's a bit of looking at that. I would want to look at that and assess it. A lot of great growth numbers. Equity ratio is strong. In the end, very strong company and very strong numbers based upon great margins that they capture on everything they do. Well, not only can you look at it from a company, internal to a company, you can look quarter to quarter, year over year, but you can also look at competitors. So here's MasterCard's. Basically what I did is their fiscal year ends in December. So I did the trailing 12 months. So it's basically 3 months of this year plus 1 month, 3 quarters of 2022 plus 1 quarter of 2021 to be comparable with Visa. That's what I pulled here. You'll notice their revenue's higher, yet their margins are lower. They also have great growth numbers. Of course, MasterCard's very global and very similar to Visa in that they don't finance the transactions, so a little bit different margins than what you would see with like a Discover card or a American Express, etc. Well, not only that, you can look at any company. So this is Boeing's numbers last year, and you can kind of see this is an aviation company versus a credit card. Very different. You're getting lost numbers over here as Boeing's still trying to come out of that downturn versus Visa, very strong numbers. Well, folks, that's the tool. So the last step of this is to apply. How do I take this and do something with it? I understand their numbers. I can see what they're doing. Now, if this is my company, I could then go back to my team and say, here's what they're talking about strategically. They're talking about 3 engines of growth. How do we impact those 3 engines of growth? What are the things we got to consider as we're optimistically moving forward, but also want to be prepared if there is a recession? That's where you get in the application. Now, here at Acumen Learn, this is core of any business. As you think about the outcome of learning business and financial, how does it really differentiate yourself in an organization? Years ago, we had a company, unbeknownst to us, a company we worked with many years. They actually went in and said, what's the outcome? What is the results of business acumen training in their business? Working with Acumen, what were the outcomes they've got? Here's what they found. 84% of them found an improvement in the performance of your business or function. 81% saw an increase in collaboration. All of a sudden, understanding your business helps you to work closer together across functions. Improved upward communication, your ability to communicate to your boss or your boss's boss. 77% improved employee engagement. 75% increased business focus, and 84% improved teamwork. If you're an L&D leader and you're thinking, how can I use this with my teams? How can I drive? We've worked with, it's actually 33 of the Fortune 50 now. If you're looking to build teamwork, you want to get greater collaboration, you want to increase engagement, business and financial acumen is a resource to help you to get that. And that the real core of what we do is you've got to do something with it. As you look at that apply section of the tool, I love this quote, to know and not to do is not to know. If you know these tools but you don't do anything with them, you do the analysis, but you don't change your behavior, you don't get results, then we're missing out on the value of this development. So the last part of the tool is, so what am I going to do about it? The first part of that tool is, what insights did you gain? Here were some great insights for me. I had never looked at Visa. It's obviously one of the world's leader in digital payment technology. Visa's mission is to connect the world through the most creative, reliable, secure payment network, enabling individuals, business, and economies to strive. This bigger picture, it's not just the transaction, it's safety of transaction. The ability to protect our information is a big part of their business. Just the sheer size of it, volume of transactions last year, 192.5 billion transactions. That's how many swipes. Now, I don't know how many of you are swiping that much, but all of us are part of that. We're part of that 192 billion. And then just the sheer volume of money transfer and moving between individuals to consumers, businesses to business, all throughout the organization. Huge margins, strong performance, but this kind of balanced approach in 2023. That's interesting to me, to think about what are credit cards considering as they think about a recession versus consumer products versus services companies, et cetera. So what am I going to do with that? I want to look at MasterCard. I want to see the differences as you look at like a funded credit card, like a American Express or Discover, et cetera. I want to share this. I'm a consultant role. I work through all sorts of businesses and help them understand how Visa's forecasting, looking at a recession area, how they're performing and how they can work better. So share that finding with my consultants, my clients, and other customers. And absolutely, if you're part of Visa and you happen to join us, somehow figure this out, we would love to come in and help build your credibility, your career, and your company by building teamwork, developing collaboration, helping people to feel more comfortable around your strategy and how they can impact it. The last part of the tool, and probably the most important, is once you've gone through this, you got to go have a conversation. I've done this analysis. If it's my company, I'm going to go have a conversation with my manager. I'm going to share, here's what I heard, and here's what I think I can do to contribute to the goals and objectives of our company. That will absolutely build your credibility. If you analyze a customer or a partner, how does that impact your day-to-day activity? Go talk to the marketing team. How can we differentiate ourselves against our how can we align with our customers better and be a better partner? If it's a competitor, how can we differentiate ourselves? So talk to your sales organization. How can we differentiate our products or service? But have that conversation. That's really moves the needle. Well, folks, that is the tool. This tool, on average, will take you about an hour to go through. Now, as you get comfortable with this, you'll be able to do it in less time than that. Now imagine if the next 2 to 3 quarters you did this with your company, if you're publicly traded, if you did this with your customer, or you did it with somebody you're interested in, how you would differentiate yourself, how much more you would know. Literally, I have employees who take our course. They do this on a consistent basis. Their managers are saying, how come you know so much about our business? Well, it's because the information's there. It's just getting comfortable listening to those calls and making sense of them. So folks, that's the last thing I want to ask you. As you think about, remember that second step was to go to your notes. Well, the notes are these quarterly. As you do this 2 to 3 quarters, you're going to quickly see what's really going on in your business, your customer business, or the organization you're looking for. So my last question for you today is, who are you going to analyze? As I give this tool, are you going to look for a company you want to invest in? You want to look at somebody you want to sell to, compete against, partner with, invest in, work interested in? Or next month, we're going to look at Nike. The shoe. Let's look at a product company and see how they're performing. I'd love to have you join us on that. So as we wrap up today, here's what I want you to put in the chat box. Here is the resource. Go to this website, acumenlearning.com. We'll put that in the chat box. You can register for our January 25th event where we're going to look at Nike. You also can access that workbook. In addition to that, there's a place for 2 things. If you want to just do a refresher, you've gone through our course, you want a refresher, we'll give you $100 off our online self-paced program. It's 13 modules, very interactive, social learning's involved in it. It's a great way to build your reconnected. If you've never done it and you can't bring us in for your team, it's also a great resource for you individually. If though you have a team, you want to do this, you want to differentiate your L&D space and the EDP programs you're doing, absolutely jump on and let's talk. We can share how we've done this with 33 of the Fortune 50 and hopefully can provide a great experience for you. Folks, it's been my pleasure. Our time is over. Thank you. I'll stay on if there's any additional questions. If not, please access that link. Download the tool and look forward to seeing you. Happy holidays. Have a great holiday season. Please be safe and look forward to seeing you in the new year. Thank you very much and have a great day.